Hello everyone, welcome to this week's weekly watch list preview. Ran some scans. I don't see a lot that I really like. Um, it was kind of slim pickings, and some of this stuff you got to be careful of the spreads. I know it's hard to tell, hard to judge. I'm not real familiar with trading these, so I don't know for sure how the spreads are, and it's hard to judge when the market's closed how tight the spreads are. But from what they're looking at right now, some of these don't look like very good spreads. So be careful of that. You got to watch. You got to watch wider spreads on options, especially because if you get in, let's say it's a $1.50 by $2, and you're probably not going to get in at a $1.50 unless it's dropping. And if it's dropping, you're probably not going to want to get in it at that point. So at best, you're going to get in at maybe a $1.75. If it starts going against you, that $1.50 bid is now going to drop down to, say, a $1.25 maybe. You're looking at an automatic $50 loss. If you get in and it instantly starts to go against you, you're automatically looking at probably 25, 30, 50% loss just right there because of the spreads. So you got to be careful of the spreads. If you're confident enough and experienced enough, you can make those spreads work for you. If you're trading something that has a $1.50 by $2 spread, and maybe you get in at a $1.75 and it starts running as soon as you get in, that $2 ask is going to jump up to 225, 250 pretty quick, and you can sell it on the ask and gain that extra $25 that you got in as long as you don't buy. If you don't mark it in or buy it at the ask, you can use that to help you, but you still have to be careful because to me it's not worth it. If it's more than roughly a 10% spread, I'm going to pass on it. And that's, let's say it's $3 by 330. That's a 10%. I'm okay with that. 70 by 77, that's 10%. I'm okay with that. If you start getting much more than 10%, I mean, you're automatically giving up basically 10% of profits right there. If you're only shooting for 15% target, you're giving up 10% right off the top. So that's why a lot of this stuff. That's why I tend to focus on certain stocks that have a lot of liquidity in their options, and the liquidity tightens up the spreads. So anyway, this is what I came up with this week. T-Mobile, First Solar, Palo Alto Networks, and Crowdsource. That's really all I have, and they're not. I don't want to say they're not the best setups, but they're just not stuff I'm familiar with or comfortable with trading. So, but I'm going to put them out there, and I'll show you why I put them out there. So let's take a look at T-Mobile. And there were a bunch of other ones that can, I mean, if you look at you look here. I mean, I looked at Apple, I looked at Dash, I looked at Dick's Sporting Goods, I looked at Docu, I looked at Etsy. I looked at a lot of these, Coca-Cola, Lowe's. I looked at a lot of these. They just didn't have anything that I really cared for. So if we look at T-Mobile, not great on the year. Yeah, it's a 2-up, but it's in conflict. It's coming back down, kind of selling off. So it's been weak as of late. Quarterly, we had an outside quarter last quarter. This quarter just started, so you can't really judge that. But it looks like it's kind of losing some steam on the quarterly. On the monthly, we had a 2-up here that kind of finished kind of in a doji, and then 2 months in a row of 2 downs. So the monthly doesn't look too good. The weekly, we had an inside week. Let me zoom back out a little bit so you can see a little bit more. Inside week, the weekly's been weak. Hasn't been very good. So I'm looking for a break below 125.86, last week's low. And then we go down to the daily, and I'll show you some targets here. Targets will be, I go back pretty far to find some of these targets. Target 1 is going to be the low of this candle here, this red candle, which is 124.67. Target 2 is going to be the low of this candle way back here at 124.15. And I know there's only like a 50-cent spread between these two targets, but remember what I've said before. That's an area you can use that range as a stop. Let's say we get down in here, you can use that range. You can move your stops to somewhere in between there. Target 3 is this low of 122.8 or 122.28. Target 4 is going to be this pivot low here at 121.02. Again, not really a favorite setup of mine. The daily does look weak also. This may look like kind of the best setup of my watch list, and I'm looking at the spreads, and again, it's hard to say, but looking at, for instance, the 128 calls, well, let's look at the puts. The 125 puts are 91 by 122. That's almost a 30% spread. You're looking at actually more than 30%. You're looking at a 31 cent spread on a 91 cent. Let's see, I can't get my 31. You're looking at a 34% spread. That's tough to overcome. Now that spread may tighten up when the market's open. I'm sure it'll tighten up a little bit. If we look at the weeklies, the 125s on the weeklies are 147 by 162. That's closer to 15 or 10%. 162, 147 divided by 147. We're just over 10.2%. So they're not too bad on the. If you look at the monthlies for the October 15th, that's not too bad. And they should tighten up a little bit once the market's open. So that's what I'm looking at for T-Mobile. First Solar. Take a look at First Solar. On the year, it's been higher. It's starting to pull back a little bit. We're going to see where we still have a few months to go on the year, but it's been selling off as of late. On the quarter, had a nice hammerish candle here, followed by almost a doji, more of a spinning top. And this quarter obviously just started, so we don't really have any data to go on that. Monthly, not quite a shooter, but not a very pretty. It's a green candle and it's 2 up, but it's not very pretty on the month. But on the week, I kind of like this last week. We came down, touched 21 EMA and bounced pretty hard off of it. So I'm looking for a bounce here. This may lead to, go back to the monthly. We may start, look for another pop back to the upside. So, if it's going to move up on the monthly, it's going to start out on a weekly or start out on a 60, you know what I mean? But, it has to move up on the weekly before it moves up on the monthly. So, looking for a pop above this inside candle here. 97.50 is the trigger. Target 1 is going to be the high of this previous week's candle of $100.58. And don't forget your psychological, your mental support and resistance levels. $100 is obviously going to be a big one. So expect to see probably a little bit of consolidation or momentum loss here at $100, just before $100. You may even pop, slightly above 100 and then pull back a little bit, consolidate for a while. You have to see what they do with it. Come down to the dailies. This was our first target on the daily, and then we have a nice gap here. So that's the start of the gap. To fill the gap is $101.80. That's target 2. Target 3 is 104.43. Target 4 is 105.10. And target 5 is 107.27. So that's what we're looking at for First Solar. Palo Alto is the next one we're going to take a look at. Why is it not showing up in there? Okay, Palo Alto. You look at the year, it's been great on the year. Great quarter. A new quarter just started, so we can't really go off of that, but the quarter was great. You know, everything else struggled last quarter. Most other stocks struggled. Palo Alto was did pretty good. On the month, it pulled back a little bit towards the end of the month, but I think everything did. There's not too many out there that didn't. Obviously inside month because we're only one day into it, so you can't really go off of that. On the week, we're inside, double inside week actually, with a hammer candle last week. So, and I know, you know, you guys out there that are strict strict candle traders. It's technically not a hammer candle. I understand that because it has to be at the bottom of a downtrend. But we call this a Momo hammer. It's kind of in the middle of an uptrend and it's still a hammer, so we call it a Momo hammer. It's not by strict definition, and I've been through all of Steve Nissen's training and videos, so I understand the strict definition and all that. So I'm not saying this is a strict definition hammer candle, but you know what I mean. We call it a Momo hammer. It's not at the bottom of a downtrend. It's in an uptrend. Even though it's been kind of flat, it's still, two up, two up, two up, and then we were inside again. But there's no downtrend there. So we'll call it a Momo hammer. So target 1 obviously is going to be the high of the previous week. Target 2 is the all-time high. I don't have any targets marked above that, but you can go down to, like, say, the daily. If you look at your broadening formations, you draw a broadening formation, and that would give you a chance to see how I do it here. You have to look for a lower low. So this is a lower low than this one. Actually, it's not. What's that low? 458.59, 458.50. So this one is lower. So we don't have a lower low here to go off of. So I'm going to come down to the daily. If I was to draw it off the weekly, I'd have to go from all the way down here to here, and I don't want the low to be that far away. That's over $100 away. So I'll go to the daily and I'll draw a broadening formation off the daily. So we have a lower low here, lower than this one. So I'll start here, and I come to this. This low here is lower than this one, so we don't want this one because we want it to angle downwards. So there's that one, and then this one here, we can come off of here and go to here. You could also come off of here and go to here. Either one of them works. Either one of them is going to give you a little bit of resistance point. So that's going to be your broadening formation for this one. You could even draw it off maybe the 4 hour. It really depends on what you like. If you drew it off the 4 hour, we have 487.18. Okay, so this is higher than this, so that's not. You still have to draw it on the 4 hour. You still have to draw it from here to here. So either way, you're still looking at very similar to what was off the daily. So that's how you draw your broadening formations. But you can look at the top of the broadening formation for an exit. If we do break these highs. Let's say we are, I can't go, okay. Let's say we break these highs Wednesday, Thursday. By Wednesday or Thursday, we're going to be way out here. The top of the broadening formation is going to be close to $500. It's obviously going to be higher than 495.92. Monday, the top of the candle is going to be roughly within this horizontal line here. Tuesday, it's going to be way over here, so the broadening formation on Tuesday is going to be up around 496-ish. Wednesday, it might be closer to 498 to 500. So I would look for that. If we break above this and you still want to continue holding, look for the top of the broadening formation, or possibly come down to maybe the 4 hour and set a stop for a close below, or even a print below the 9 EMA. Or you can come down to, say, the 60 minute and look for a reversal. Let's just say, for instance, this let's just move this over and pretend none of this exists. Okay, here's your chart. Let's just pretend that this is this week. You have a two up here, two up here, two up here. Okay, you're still good, but it's starting to show a little bit of momentum loss here. Still two up, and then you come to here and you get a two down. That's your exit because you broke below the low of this candle. That's your exit there. So that's three different strategies for exiting a trade when you're at all-time highs. Any one of them will work. I'm not telling you one's better than the other. It depends on how the chart's looking at that moment. The next one we have is crowd, and this is something I don't typically, and I know I've done it before, but it's been a while. I don't typically look for these, but since there wasn't much to go off of, I went ahead and looked. These are still very good patterns. It's called a 1-2-2 reversal. In the strat world, it's called a rev strat, reversal strat. What it is, it's an inside candle followed by a 2 in one direction, followed by a 2 back in the other direction. What I don't like about this one, I'd rather this candle be green. That shows that we had some buyers late in the day Friday before this candle closed. This is showing there was sellers were probably more in control right before the close. So I don't like that. I do wish this was green. This would definitely be better if it was green. But in fact, let me go back and see if I can find an example. Kind of look at this as more of a training type thing. Yeah, it has to be. It has to start with an inside candle. Here's one here. We had an inside candle followed by a 2 down. The bears couldn't stay in control here. They started out in control, but they couldn't stay in control. Once the bulls stepped in, we broke above the high of this candle. Technically, your magnitude or target is at the high of this candle, which on this one it's not much, but it's very powerful. Trying to find a better example. It's a very powerful setup. Here's one here. This is on the daily chart, but it's still the same principle. So we had an inside candle followed by a 2 up, followed by a 2 down. Our magnitude technically is here. Then after that, it's here. Next magnitude would be here. It didn't quite get to that one, but still, if you would have got in this trade right here at the break below the bottom of this candle, you had a $7, $10 move. From the low of this candle was let's call it 208 to the low of this candle is 196. $8 move that you could have jumped in on, even if you only rode it to here to your magnitude, 202.70. You're still looking at over $5 move. That's called a rev strat. So it's it's an inside candle followed by a break to one direction that failed, followed by a break in the other direction. It's a better signal if this is a green candle, but unfortunately it's a red candle. What I do like about it, it's been pretty good on the year. It's been better. It's kind of fading a little bit. On the quarter, it's kind of losing some steam on the quarter. On the monthly, not great on the monthly, but we did come down. We're coming down close to this 9 EMA, so we may look for, may be able to bounce here. I'm not saying this is the greatest chart, but what I'm saying is just to watch for it. We've had a couple of weeks of, rough weeks here we've kind of lost momentum, not done a lot. Maybe this sell-off / consolidation is what the market needed, just to take a breather, and maybe we decide to take a run back up. If we do, this would be one to look for. So an inside candle followed by a 2 down. It's not a hammer candle. Again, I know it's not a hammer candle, but let's just call it a hammer candle. Inside candle followed by this hammerish candle, and then if we break to the upside, break above this 260.89, that's our trigger. We'll come down to the daily. our trigger is going to be here. Our target is going to be, target 1 is the high of this candle at 262.05. Target 2 is the high of this candle at 264.29. Target 3 is the high of this candle at 266.72. Target 4 is the high of this candle at 269.70. Target 5 is the high of this one at 270.58. Target 6 is up here at 279.80. This rev strat works on any time frame. Let's just say, for example, we have an inside candle here followed by a 2 up. Let's say next week we break below this candle. That would be a rev strat in the opposite direction. And if you look at my charts, I had crowd on my watch list last week for an inside candle. A lot of times you can look at last week's inside candle setups and look for a rev strat for that same chart for the following week, because if it breaks to one direction or the other, now it's going to potentially set up for a rev strat the following week. So that's what I have for this week. Hopefully, like I said, I'm not overly confident in this. Last time I said that, everything hit every target. So, but I'm not overly confident in this watch list this week. I don't like, number one, I don't like their tickers. I don't usually play. There's bigger spreads that I'm comfortable with on some of them, and none of these are really great setups. I think T-Mobile was probably the best looking setup. Yeah, T-Mobile looked like the best looking setup. Looked weak on the daily, looked weak on the weekly, looked weak on the monthly. That probably looked like the best setup out of this whole watch list. So, but anyway, that's the watch list for this week. Thanks for watching. Hope everybody kills it this week, and see you guys the end of next week. Later. Bye.